Peace and love, everybody. This is Young Nas from iGotOptions LLC, and in this video I want to talk about my review of my S&P 500 prediction from earlier this week. Alright, so I want to say sometime earlier this weekend, I took a look at the S&P 500, and I was like, you know what? I expect this ETF, the SPY, to drop down to $444 a share. Alright, now, my reasoning as to why I thought this wasn't even from a charting perspective, it was more so from a fundamental perspective. Because I was saying, okay, we see how strong the market is moving ever since this new COVID variant got announced, and it's really just going up and down, up and down. And I was expecting this downtrend to basically continue. However, as we see, that did not happen. The SPY ended up shooting upwards. Alright, so with that being said, my prediction was incorrect. But let's talk about it. What happened? This candle right here moving forward tracks what happened on Tuesday. So already this opening candle was very bullish. However, what caused the SPY to be bullish? What caused investors to kind of lose that fear of worrying about this variant and whatnot? And to answer that question, I have up this article written by investing.com, and the title says, the S&P 500 eyes record as tech fuels biggest rally since March. Alright, so based off of this title, this is going to help provide some sort of explanation as to what's going on. Alright, so if we scroll down and take a look at this first paragraph right over here, it says, the SPY delivered its biggest one-day rally since March as a record run in Apple and strong gains in Intel triggered a rally in tech to help the broader market set its sights on record highs once again. So what the author is basically saying is there's a correlation between Apple and Intel, which had an effect on the overall tech industry, which then had an effect on the S&P 500, right? Because you may not know this, but if you take a look here, the S&P 500 is strongly affected by what stocks like Apple, Microsoft, and Amazon and Tesla do. You might be thinking to yourself, well, this isn't the QQQ, right? This isn't the NASDAQ where it's made up of majority of, tech-related stocks. This should really be a broad, diverse index, right? In which it is. However, that doesn't change the fact that it's affected by what tech does. So with that being said, if you take a look here, this shows you the stocks that have the strongest effect on the S&P 500. So we see here, number one, it says Apple, and we see Microsoft, and we see Amazon, Facebook, Google. So you'll notice that these stocks happen to be in that technological industry. So when Apple received this news that caused it to go up, this had an effect on those tech stocks, which helped support the S&P 500 going up. And if we take a look back at this article, the reason why Apple jumped up so high is because Morgan Stanley rose its price target on the stock. Now, that being said, do I still think the S&P 500 can go down? Yes, because I still think it's interesting how this index is moving, right? Ever since that variant was announced, it's been moving very strange, right? Very different. And I'm going to continue to study this behavior because it is a bit irregular from what I've seen in the past, all right? So with that being said, this is my review of my S&P 500 prediction. Peace.